there's huge opportunities all over, and silver is part of that green energy revolution as well. So there will be definitely a strong demand component coming to the silver market from that source as well. So I think that you're going to see more and more demand coming into these metals, and now with the war going on, it just accelerates everything. There's a much more of an urgency. So the commodity sector in general has just been near all-time record lows. So you really, from copper to all these metals, you can't go wrong.
To meet the growing global demand for a cleaner, greener future, supported by alternative fuel materials, Argentina Lithium and Energy Corp has assembled a first-rate team of experts to acquire and advance the best lithium properties in the world-renowned Lithium Triangle.
Welcome back to Inside the Markets, flagship podcast at StockPulse.com. And joining me today, Peter Spina, owner-operator at GoldSeek.com, SilverSeek.com, hanging out there in Prague. So, Peter, I've been quite a while here. I like your background here. I like gold. I like silver. So do you. Let's pull way back here as we usually do and hit the big picture. Let's give us a macro view from your eyes of how this economic world looks right now.
Right. Well, thanks, Rob, for having me back. And like yourself, I love gold, and I love the truth as well. And the background behind me with GATA is about transparency and about having honest a system of transparency in the U.S. government regarding our gold holdings. So I've always been very supportive of GATA and their efforts to provide transparency with the U.S.'s gold holdings. And on that note, with gold holdings, gold's becoming quite a topic internationally now, with gold becoming a pretty big player with the war with Russia and the West, and oil and energy payments and so on. So I think we're entering into a very interesting period where gold could be used more and more as money on an international payment, an international payment system, especially with the BRICS countries and them trying to peel away from the West's power and influence. But their biggest issue, of course, is finding a currency which they can rely on. And it looks like with Russia, their two main currencies now is going to be the yuan and their Russian ruble for them domestic, but for international purposes, gold and the yuan are pretty important to them going forward. So we're seeing some really big shifts. Before that, Russia was getting de-dollarizing for the last prior years, but adding a lot of euros. But now with the war, the way the things have developed between Europe and Russia, the relationship, they've pivoted as well. And Europe is just in a world of hurt. So we're in this really interesting setup where Europe's in big trouble, and at the same time, you see the US dollar surging through the roof, and you have all these imbalances and things going on. So it's quite the moment we're at right now.
Yeah, it's almost like nothing makes sense anymore. Everything that you were taught, gold and silver should be flying. They're actually relatively in decent shape, I would argue. The junior miners probably would certainly like to see a boost there. But it seems like everything reasonable is kind of out the window. So yeah, let's kind of dig into something that you hit there. You were talking about an energy crisis here, not too far from where you're at here. Russia seems to be in a power position. I've also read the camp that no, Russia's actually not in good shape. So I don't know, how do you kind of break all this down?
Well, Russia's they're going to go through some difficult times, and the population there can deal with it, but they're not going to have an energy crisis like we're seeing here in Europe. And today here in Prague, we had a big meeting between the energy ministers. The Czech Republic is heading the EU presidency for 6 months. They do this little silly rotation for every 6 months where they have every country gets 6 months to be the president, this kind of figurehead of the EU. But at the moment, they're hosting the energy ministers here. Lagarde, she had some comments about what's going on, but there is a division within the European Union of how to handle the crisis. The latest thing that came up a week ago was a G7 saying we're going to put price caps on Russian energy. So the retaliation was immediate. Russia said, well, we're turning off Nord 1 to Germany, and we're not playing this game. So you have a really difficult position for the European countries who are going into a difficult winter with energy crisis. Economically, they're very shaky post-COVID lockdown. Inflation is raging, and you have a population that is starting to say we're not really in solidarity as much as you guys are with Ukraine. And there's divisions. And then last Saturday here in Prague, again, we saw a massive demonstration. I think that they said it was the largest one since 1989. So 70, 80, 90, 100,000 people showed up on Wenceslas Square and said, we're done with this. We want the government to quit. We want a new government to come in and create short-term energy contracts. And we don't want to go through this energy crisis because it's going to really shutter the economy. Factories are going to be shut down. It's not just having, you can't put your heater above 20 Celsius or 19 Celsius at home. The energy is feeding the economy, and it's the essence of how everything operates. So, it's kind of like you're going to have a huge upheaval, resistance of the population who just can't even afford the energy bills. So you're going to have government handouts trying to stave off, a really angry populace. But you're going to see more and more pressures politically. And today here in Prague, I think it was the Austrians who don't have as large of a gas reserve for the winters as the Germans. They don't want to put a price cap on the Russian energy. So there's a lot of division. Europe is divided in many ways, and this is just adding to it. So it's not good for the euro. I mean, there's no good reason to be in the euro. The warning coming out now is that there's $1.5 trillion worth of energy derivatives liquidity needed to stave off a bigger problem. We're going into the timing of all this couldn't be worse, and I think Putin played it pretty well. He saw the cycles and things were happening, and now Europe is and the rest of the world pumped all this money, all this inflation in the system, trying to deal with that, and now to try to deal with this at the same time. It seems like a very difficult situation, and I believe what's going to happen sooner than later now is we're going to have some issues with large financial institutions, banks, liquidity issues. That's going to be the pivot that brings central banks from quantitative tightening to we gotta bail these guys out. The governments are going to have to do big bailouts, and the ECB is going to backstop that or whatnot. So it's going to be forced upon them, and at the same time we have a strong dollar, which is draining a lot of liquidity out of the system, and it's causing credit issues, and rates are rising and everything. So it's a confluence of problems. So it's a really uncertain period coming ahead, and definitely the risks are very high. So,
but what about the Inflation Reduction Act? Isn't that going to save the day?
Yeah, just like the war on drugs, it just spending trillions and trillions of dollars to not solve the issue, but yeah, to spend money to create less inflation. I don't know. It's this level of stupidity now that we hear and see on so many different levels, and on top of that, it's just the divisions are just growing, and it's just with Biden's speech last week, that was just scary. I couldn't believe what he was saying and how it was presented and what's happening, and there's just so much division. So how do you deal with crisis when there's so much division internally?
Yeah, I think if we kind of move on to the monetary side here, how do you deal with crisis? I think obviously we're a fan of a real hard asset here in the metals sector. So I guess give us your kind of outlook here on the precious metals sector, and then we'll move into some of those more strategic metals, because on the EV front, it doesn't seem like they really have much of a plan to attack the supply chain. There's no possible way to pull off their net zero emissions. So I guess I hit those two.
Yeah, that's the joke. The precious metal sector. Well, gold prices have held up relatively well. The silver price has just been beaten down way beyond where it should be at, and I think we'll see a quick snap back here. We've crumbled way below supports And we've gotten to the point where we see the commercial banks stepping in and going long silver. The COT, the internal structure, is very gone bullish. We're seeing more and more supplies being drained on the wholesale level, which is important. So it's not the retail, really that side. But silver's, it's industrial metal. So, we've had the lockdowns in China. They're still playing that zero COVID policy game and shutting down major population manufacturing centers. So that's causing a reduction in demand. And at the same time, economies are falling back. We have a really large buildup in inventories, not in silver, but just general products and so on around the world. So there has been kind of less demand for commodities, but that's also then a temporary thing. We've got a lot of liquidation of speculators out of the market. A lot of that has taken place in not just silver, but other commodities. And we're, I think, pretty close to the point where, you look at the silver price, and the silver producers are requiring a silver price in the low 20s to really break even when you really account for the true cost for a primary silver producer. The all-in sustaining costs are much higher than $17, $18 an ounce. So, that eventually this just doesn't work. So from an investment perspective, the risk on the downside here is very minimal, and the upside is quite high. So I think we're going to see a big snapback. The precious metal stocks, especially the miners, the GDX, it was really hammered. It's about half of its price from back in March. And some of these companies have had some significant increases in production costs, and that's definitely plaguing the sector. The inflation is showing itself immediately in the production costs. You can't hide the true cost of inflation when it comes to the real world. So they're seeing what's happening, and that's added pressure, and the margins are slipping on these gold miners. But the margins overall are still there. A lot of them are still quite healthy, and they're in a lot better shape than they were years ago. So I think looking at even the senior producers and mid tiers, they're all on fire sale right now. It's just absolutely to an extreme, and the sentiment's to an extreme, and everyone has just kind of given up. So it's that kind of contrarian view inside me. It's like, oh wow, this is getting to the point where adding leverage is interesting. So that's kind of what I've been playing with a little bit more here, with the view that, say, if gold doesn't, if gold holds 1675 and higher, then I'll continue to employ the leverage. If gold does need one more big correction and there's another big general market sell-off, another big crash, which is quite possible in the months ahead, 1600, 15 to 1600 is still open there, and that would do another downdraft. But for right now, there's a window that looks like gold is going to hold this, and I think the lows are in for gold. I think it's going to start moving back up. It's just been toying with people on this sideways channel action. So the mining stocks are just absolutely I would have never thought it gotten to this extreme. So silver, I can understand more of the silver side, the sell-off on the mining stocks, because that's such a huge fall in the silver price. But that'll really, you'll see the snapback very quickly when silver gets back to the low 20s, which I think will be, wouldn't be very difficult for the market to go back to in the next maybe 1 to 2 months, settle down there, and then we'll see what happens with the economic side and the investment side. But the upside, I would say, with the silver crash, that it has moved so aggressively to the downside. You see a lot of speculators that had gone short, so there's a lot of short ammo there from that side, and then we're seeing a very quick draining of the physical side. So that's just that's from the fundamental view. From longer term, that's quite bullish.
Yeah, let's get into the supply chain here. Heading over to the strategic metals. You got uranium in a nice place. They're going to need cobalt. You're going to need nickel. You're going to need lithium. You're going to need all these things to accomplish their plan of whatever the green movement plan is. I guess, like we said, the zero net emissions, which makes no sense because that means that we wouldn't be around. But let's play the game. Put investors in a good spot there with some of those. Probably in a nice channel here, right?
Yeah, well, Mark Faber calls them the green communists because the mentality is just absolutely, it's just mandating things that are impossible and realizing that the amount of energy needed for a lot of these green solutions, the energy needed is much higher than what you're getting the result from it. So the equation, it doesn't, balance. It doesn't make sense. But what does make sense, from an energy independence and a way forward to fuel this green mandates, you need some real high amount of energy sources, and if we're not going to be using oil and natural gas, and we have less of that available on the global market to the west, because all of a sudden we just kicked Russia out of the picture and they're going to be going to the Asian market and so on. Well, the energy prices are going to go so high, so the cost of extraction of these metals are just going to go way up. It's not just green energy metals, but it's also going to be even gold and silver. So, and all, it's talk about refining and all these other processes like that, very energy intensive parts of getting these metals out. The costs are going to go way up. So, this is a very expensive proposition, and there's not, the energy solutions presented aren't sufficient for what the demands are. So the only solution that really makes sense is uranium to really go back and look at that as one of the green energy sources. And you see a lot more discussion about it, a lot more people in the the co-founder, the founder of Greenpeace movement, he's been promoting uranium as a green energy source for many years. So there's a lot more education that's gone around regarding uranium. It's not without risks, but compared to what you get out of it, the amount of energy and what we need, it's absolutely, it seems like uranium's in a perfect spot. The supplies have been dwindling. And my gosh, if Kazakhstan or some of these Soviet republics stop selling us uranium supplies, it's just there isn't enough above ground stock. So we've been through a horrible bear market in the uranium sector, just like the precious metal sectors, that the exploration and development uranium assets hasn't taken place, and now all of a sudden you just have this huge interest and demand coming now into it. You're seeing, probably Germany is going to have to keep their nuclear reactors on. I think here in the Czech Republic, we have a couple of them. They're going to be expanding them. You hear all sorts of, interest now in the West about that. And I think that'll continue to grow. So I really believe uranium's in an excellent position. Again, I remember back 15 years ago when it ran up to about $150 a pound, that seemed like that was just like an appetizer of what could happen here, where you could actually get a real super squeeze in some of these commodities, and uranium. It looks like that's got that. And as far as cobalt and lithium and all these other metals, you can't go wrong in those sectors. Although you seem like with lithium and some of these stocks and the prices have been going through the roof. So you got to be a little bit careful. There's a lot of deals, and a lot of them are not really good. A lot of new deals are not really all that good, and there are some good new ones. And there are some excellent discoveries. I've seen the Patriot Metals group. Those guys have just been on fire. That's pretty much one of the only lithium investments that I have. So, there's huge opportunities all over, and silver is part of that green energy revolution as well. So there will be definitely a strong demand component coming to the silver market from that source as well. So I think that you're just going to see more and more demand coming into these metals, and now with the war going on, it just accelerates everything. There's a much more of an urgency. So the commodity sector in general has just been near all-time record lows. So you really, from copper to all these metals, you can't go wrong. The only thing I would say though is if there is a real economic, not just a recession, but a real economic collapse, if things just really get out of hand, if say we just have a financial blow up, if the banking system, everything just the day of reckoning comes. Well, the economy and demand for these metals, that may all change for a while. But longer term, any pullbacks like right now in some of the metals, I think they're all excellent opportunities.
Yeah, we've spoken before about the majority of the time spent in this sector is miserable if you're an investor in some of these equities, and couldn't agree more. A lot of these investors have been just beat up here, but like you mentioned, the contrarian. This is when a contrarian should rise here. So I guess let's guide a little bit here and maybe give some hope to these equities holders that have just had their prices bashed. You mentioned. Interesting, maybe some average down opportunities here. So give us a little bit of a forecast for your eyes.
I think we get a really nice bounce. I don't think we can say that this is the reversal move. I think if something falls 50%, it needs to double to move to where it was like in GDX back in March. So we may get 40, 50, 60% rallies in some of these stocks, and then it may pull back again with a general market sell-off. But right now, where these stocks are trading, especially the miners, and you have to be a little more selective. There's some companies that are really getting squeezed on the margins, or they're not in the best positions financially. Their balance sheets are not in the best shape. But for the most part, most of these companies are in pretty decent shape. So the miners, even the senior producers, which I usually do not consider. I was picking up Newmont here recently, which I rarely ever touch that side. And at the same time, back in July, I was buying tons of Abra silver. They hit a nice drill hole outside of the existing pit that they in this next phase of drilling program. Some huge hits, the best results they've ever had. And the stock went, had dropped severely, and then it doubled really quickly. So you see what happens. The exhaustion of the sellers is quite apparent. There's not a lot of supply left. So the second demand comes, you just get a blast off move in these stocks. The greed comes back in so quick, and then it's just like a bidding war really quickly, and you get these really big run-ups. And then it'll probably overshoot itself a bit, pull back, and then we'll see where things are at. But I think that the big question is when do the central banks pivot, and is there a larger liquidity issue coming up? And those are definite concerns. But for the moment, my gosh, the sector has been decimated. These are some levels that it compares. It's even worse than 2020. Some of these levels, because we have gold much higher, and these companies are a lot better shape. So I am not bearish on the gold silver sector stock side, and I think it's not a bad idea to pick up some long-term call options on some of these producers.
Yeah. So for investors who may just be coming across this podcast and have no real exposure to the sector here, paint them a little picture of how things go here, and how this truly is maybe one of the greatest buying opportunities of all time.
Yeah, it's not an easiest sector. It will, compared to a lot of other sectors, you really get extremes, in this sector. So what we're seeing right now on the downside, there will be a point where we get one to the upside that'll overshoot itself. But right now we are in such a negative sentiment. And when you get to these situations where people just seem to be giving up, that's a heck of an opportunity. And I've seen this now over the last 20 some. I've been investing 25 years plus in this. So this is like third, fourth really bad one. This might be one of the worst ones. So to me, it's not. You're just going to the store where there's just a fire sale, and just kind of hard to know which ones to buy right now because there's so many opportunities. And when the sector revives here, and again, that can happen very quickly with the gold sector. The gold price hasn't fallen. Watch 1675 as a technical support. If that holds, I don't think you're going to see another week or two more of these prices. I think the sector is already making it's a big bounce move, if not the reversal. And even if we do get a big bounce, another sell-off, we may not get back down to these lows. Things are just so overextended. It really is an extreme. So the valuations here, as long as the gold price doesn't make another big drop, it couldn't be more bullish on the miners right here. I just wish I had more cash to load up.
Yeah. So I guess off that point there, talk about your operation here and what you're doing here to help investors.
So at the moment, I'm spending a lot of time catching up with mining companies, exploration deals. There's a lot of small, tiny companies with $5 million market cap, $10 million market caps, exploration projects that have been sold off from their peaks a couple of years ago by 70, 80% or more. And it's just, there's some really good projects out there. So I'm looking a lot too at the exploration side, getting a lot of updates, and we'll be digging more into which ones have more of the more near-term potential. But yeah, I've been really excited with like Abra Silver. Some of these companies been able to continue their drilling campaigns and keep developing these projects and adding more ounces, adding more value. And they're adding more value as their share prices are coming down. So I love that. Silvercrest, metals. I mean, some of these companies are Mag Silver. They're just getting, I just love these prices. I wish I could have buy them all, but it's hard to know which one's big. So yeah, going through that, and then again, it's an opportunity cost. It's like, where do you allocate your capital? Which one has the best upside, and also assessing that with the risk side. So I'm trying to balance that where I have a little more on the miners side, the little larger miners at this point, but once those start to bounce, I'll start to add more to the exploration side. But I have been picking up exploration plays here recently.
Yeah, before I let you go here, I know you wrote a nice article. I want to pay respects to a common friend we had, David Smith from the Morgan Report, senior analyst, and I know he's a good friend to you guys. Stefan wrote a nice piece on him there. So, any thoughts on David Smith?
Yeah, David. Wow, what a true gentleman! Real, just man with such integrity, and just a kind man with. He never complained. He was always such an optimistic person. And in this sector to be like that, that's quite unique. He had such an ability to communicate stories to the average, retail reader, which is such a difficult thing to do. He really, he was a big part of the sector, and it's too bad more people, aren't like that. Like he really was, on a personal level, a dear friend, but also to the sector, he was a big part of it, and he brought a lot of class and integrity, and that's it's a real shame that he's no longer with us. And he was quite busy until his final time here, writing articles and doing interviews. So I would definitely suggest to people to read that, because he has a lot of wonderful insights that can really help us guide us forward. So. Yeah, it's a big loss, and it's really hard to know that he's gone.
Yeah, he was my MVP last year for our symposium. He what a stand-up guy, and we're actually working on his final piece, and I recorded it with him, so we'll be releasing that. That was a tough one to know this, but thanks for that, and thanks for Stefan for writing that. So Peter Spina, operator, GoldSeek, SilverSeek.com. Again, what's the best way to follow you?
On Twitter, as long as they allow me to continue posting there. So at GoldSeek, and then on GoldSeek.com and SilverSeek.com as well.
Okay. Interesting times. We'll certainly look forward to checking back in and seeing how things are going, but always appreciate your time and your insights.
Likewise, Rob. Appreciate it.